tuning into the Property Show and a very happy Dussehra to all of you. Now, these 9 days are considered as one of the most auspicious times to buy property, and reports coming in suggest the developers are clocking pretty strong sales numbers. What about prices though? Now that sales have jumped, are prices going to follow? Will India's home prices do a catch-up with the soaring property prices across the world? Joining me for some data-driven answers to that important question are Ghulam Zia, Executive Director at Knight Frank India, Amit Bhagat, CEO and MD, ASK Property Investment Advisors, and Abhishek Kapoor. He is the CEO at Puravankara. Abhishek, the first question is coming your way. I mean, in North India and NCR, I'm getting a glimpse of 2008. Literally, there's one developer who's saying he sold 400 crores worth of inventory in just 4 days. There seems to be some FOMO which is coming into real estate. Is Bangalore a saner market? What's been your own experience with sales?
So sales have really actually picked up. In fact, RTM inventory, which is ready to move in inventory, is pretty much come down to nil. The levels are far lower than it was before, and that is resulting into new launches and sustenance project picking up.
Right.
So the market is definitely back. The low interest rates are helping. The increments that have happened is helping. The employment's looking like it's going up. So overall, the positivity is rubbing off. And of course, the COVID and the pandemic of last 1 year has ensured that the customers are actually taking a view that they want to buy and own an apartment now. Because of multiple reasons and the experience they have gone through in the last 1.5 years. So generally, I think overall the market is far more buoyant. Yes, you're right, the absorption levels have gone up.
So
the only disclaimer to that, I'll just add one point.
Go ahead.
The only disclaimer to that is that most of this demand is skewed towards branded developers. So I'm not saying that we are back at the pre-COVID level, or when we were at the peak of 2008 in terms of absorption levels. But what's happened is that the larger, stronger, more organized player who have got a strong delivery record are seeing more market share of the smaller, relatively lesser market that was there back in 2008. So if I put it in that context, customers are clearly taking a view that they want to buy from stronger, larger, well-organized players. So hence you will see a dichotomy because of this consolidation.
So you answered my second question. So sales are good, but where are they compared to pre-COVID? Or probably, even 2013, we were actually selling about 4 lakh units in top 7 cities. I don't think the numbers are adding up to that as of now, but the market is shifting to developed players, as you said. Okay, before I come to Ghulam Zia, here's some data culled out from Knight Frank's report on Global House Price Index, which actually corroborates that pandemic has brought back some frenzy of home buying, not just in India, but across the globe. So if you look at the top 10 of the world's developed economies, they've averaged a price growth of 12% in 12 months leading to June 2021. So we are 4 months ahead of it. We haven't got that data, but 12 months to June 2021 has been phenomenal. Some of the countries which have clocked double-digit growth include New Zealand, which saw a surge of 25% plus. We also had United States at 18.6%, Australia at 16%, Canada at 16%, and UK registered about 13% plus up move. So that's a big jump in real estate. Now the index shows that only 2 countries amongst the large economies registered actually a price decline. And guess what? India is one of them, along with Spain. India actually registered a 0.5% decline in the 12 months to June 2021. So Ghulam, I'm looking at the data and saying, hey, great that sales are coming back. Fantastic for developers, long awaited. But as a country like ours, where home ownership is still quite low, prices not rising is a good thing, isn't it?
Well, if you are looking at it from consumer perspective, then you're bang on. That a buyer would
I only look at it from the consumer perspective, Ghulam.
And to start with, even consumers, as long as they are about to buy, they would be on the same wavelength as you. But when they have bought it, they would want to see the other picture. They want the home that they have bought, the prices to shoot up, etc. But that's it. Here we're talking about data. And the question is about how do we explain the prices not going up yet. Let's not forget that we have a huge baggage of about at least half a decade of depression in real estate market, residential real estate market, where pretty much all over the country, not just the top 8 cities, but even otherwise, the prices have been falling, free fall for last so many years. So here it is. After a long time, we are watching some exuberance from the consumer side, and that perhaps is also after that the once again much used falling knife theory. People didn't want to buy when they realized that the prices were going down. Now that that sense is behind us, people have realized that now the prices are not to go down any further.
Right.
We see the frenzy, and as we heard earlier, it's also the COVID-driven frenzy which is also bringing them back to buy more rather than renting more. So a lot of things have fallen in place today, whether it is the lowest, historically lowest home loan interest rates, etc. Whatever it is. The reality is that the sales numbers are going completely down. Because in fact, we were looking at some Navratri data, and right now in Mumbai we are looking at transaction number of IGR more than 350 apartment sales every day. Perhaps the 10-year.
I missed that. How many apartments every day?
356 apartment sales every day is what IGR data, the registration data of Mumbai alone. I'm not talking about MMR, I'm talking Mumbai Municipal Corporation. 350 plus apartment sale per day is the Navratra average that we are clocking. So it is convincingly, with conviction, we can say that it is bouncing back. The question is about prices. Are the prices going up yet? We don't want to believe yet, because on the other side there's a huge inventory overhang also. So unless the inventories are finding placements or buyers are taking on that inventory, at least in the short term, we are not expecting the prices to go up, except for a few, as we spoke about, branded developers may experiment with some 10-12% increment in the prices, and whether the buyer will take that bet or not, we have to see. But at least for the moment, we don't really see much of a price rise.
All right, so no trend which is showing a firming of prices in the short term, but sales are, like you said, going bonkers. Okay, I'm going to also come back to that point that you said that the market has been depressed for so long. Now, JLL came out with its annual home purchase affordability index, and that index shows that between 2013 and 2021, in India, affordability has increased consistently across key Indian cities, which is Delhi NCR, Mumbai, Kolkata, Chennai, Pune, Hyderabad, and Bengaluru. Now, there also seems to be a return of institutional money into India's residential projects. Again, we've just got a press release from JLL. Analysis shows overall investments were up 17%, and guess what? Finally, some money seems to be coming back into residential projects, which received the maximum chunk in the July to September quarter at 29% of the pie. So, Amit, here's what I'm going to ask you. Institutional money will go where there are expectations of a high IRR. So, whether it's equity or debt, I'm not very sure of that, but if the money is going back into residential, is there an expectation that sooner than later prices will rise?
So I think if you look at the kind of institutional money which is now coming back to the residential real estate sector, is only debt in the last 2 years. Initially, players focused on distressed buying of portfolios entered the market, and they continue to remain structured debt players. Equity in residential is yet to make a comeback, and unless and until that comes back, it will not be on the expectation of a price rise increase. Currently, all structured debt players, whether they are focused on distressed buying of portfolios or on the local structured debt, they are all focused on around 20% or 20% plus returns from these projects, where they are thinking that they are bailing out the developer, because non-banking finance companies cannot be refinanced, and non-banking finance companies are not able to extend incremental credit to the sector. So currently, no financing is happening on the expectation of a price rise.
So, Amit, if you're saying that most of the money is moving as debt, then clearly it doesn't matter whether prices go up or not. Institutional investors will get that 20% returns that they are hoping for. So my question to you is, in that scenario, should we even expect a price increase?
So now, if you look at investors are not there in the market, only users remain, and the upgrade demand remains. So if you focus on these segments, it is very product specific, project specific, brand specific. I have seen projects which is in the first 30% stage of construction, they have increased the prices this year by 20%. I have seen 10% product prices going up in a luxury project and the prices remaining the same in the affordable housing. So you can't paint with one brush everything today. It has to be project specific, location, growth corridor, differentiators, design, everything, and then you can command a premium based on what you have to offer to the end customer.
Abhishek, you tell us what's been happening on pricing. So affordable has always been very price sensitive in India. In your Provident brand, have you been able to increase prices, or have you been able to increase prices only at the upper end? Which markets? Can you just give us a sense?
So, as the commodity prices have gone up, and we have seen that gone up in last 1 year tremendously, and the way it is going right now with the increased diesel prices, etc., it's only expected to go up further. So to protect the margin, and of course to make sure that the whole objective is to ensure that the business is viable and the project happens, right? So you can't continue to squeeze margins. So hence, our view is that the prices will increase only because people will protect their margins, and the inflation is catching up and the commodity prices have gone up. I mean, it's including labor cost. So, to answer your question, we have been able to increase prices and the market has absorbed it, and that's promising for us because we believe, developers who will protect their margins are the developers who will eventually deliver, right? You don't want a situation where developers are not able to deliver projects because there is no margin, and then of course, there is debt and there is finances, so from overall perspective, I believe that the prices are going to continue to go up, and they have gone up as far as we are concerned. Yes, there is a range. Possibly in some projects it's between 5-6%. In some project it's gone up as high as 12 to 15%, depending, as Amit rightly said earlier, micro market, product, and specific demand supply situation. So you take those judgment calls. But yes, I mean, overall basis, we see that trend continuing. But it may not be for everybody. I mean, there will be always developers who will be small or mid-size, and they will be always under pressure for cash flow, and those are the decisions that people will take.
I think the market itself is gravitating towards branded developers and more assured delivery projects rather than going into projects where you're not sure of the delivery and the delivery track record. So I'm going to go through this Reuters survey because our audience wants to know what is the price trend which is expected. Now, Reuters did a poll in August which shows that there is no significant expectations of a price rise. National house price rise expectations in 2021 were 2.5%, and as Abhishek has said that some developers like him have been able to at least cover the commodity price inflation and raise prices by about 4 to 5%. But going forward in 2022 also, the expectation is that at national level you'll be able to increase 4.5% prices of homes. 2023 it'll be 5.3%. And if you take a city-wise look price expectation, there too I think the range between Delhi NCR and Bengaluru, which is showing the highest of 7%, there's not any case, Gulam, right now for that FOMO that I'm seeing. I mean, I understand that it is going to be developer to developer, and some micro markets will be able to see a 10% increase, but where's this whole sense of if I don't grab a property today, I'm going to miss out something big?
Well, it's something which is yet to set in. The FOMO that we are talking about, I will take some time to really convincingly say that this indeed is a FOMO. The transactions that are happening, as Amit also spoke about earlier, are essentially driven by the end users, and there is obviously no investment demand here. So the end users who always wanted to buy, and once again going back to what I said earlier, that this wave is happening or occurring almost after half a decade, if not more, of a depressing market. And in those depressing times, let's not forget that the wealth creation happened. Offices were opening up all over. In fact, just pre-pandemic, we saw almost 60 million square foot office absorption happening, which means that many more jobs created. IT sector doing fabulously well. So what we were looking at during the time of the residential market depression, wealth creation was nonetheless happening, job creation was nonetheless happening. So all those guys were waiting in the wings for markets to at least give them some indication for their comfort to come in and buy the products that they're looking for. So this was a huge pent-up demand which always existed. Now they, for last 5-6 years, who are waiting in wings to buy the apartment are coming forward and signing the dotted line. And they are the ones who are making these numbers look bloated. I would still use the word bloated because only if the same numbers continue quarter after quarter, would we then say that now it is the question of FOMO coming, and this is just when the times are turning, as all the panelists are talking about. These are the best products which are picked up. You know, when you have a good developer, you have a good product, you have a good specification, good micro market infrastructure, all there. So these are the best products which are finding buyers, albeit even if it's a question of a premium, people are paying for it. But as times move forward, both these questions, whether it is called FOMO or whether the premiums will continue to come, time will tell. For right now, we are passing through the transitional period. I would say let's wait and watch.
Let's wait and watch. Amit, final question. You think that at least we'll be able to get inflation plus 2 to 3% returns in residential real estate starting off from 2022? Because like Ghulam rightly said, you know, for the buyers, if prices don't go up, affordability increases, it's fantastic. But that big question that will Indian housing market catch up to the kind of surge that we've seen in the global market, or you don't think so? We've got enough supply coming in most markets.
No, I think via 22, I see it coming from 21. And I'll give you my reason for it. Wholesale financing to developer has remained at the same level in the last 4 years. Retail mortgages are still growing at 13% compounded annual growth rate. We have the lowest mortgage rate seen by us in the last 20 years. So the supply of under construction as an inventory of the units being absorbed is reducing. Some peg it at 14 quarters, some at 19 quarters. That includes stuck projects of extended suburbs, projects which are by non-reputed developers. So I see the reputed developers being able to pass on the incremental cost, whether it is cement and steel prices, plus also able to increase prices as and when they are able to sell 30-40% project, they will be able to increase prices, and that trend will start now.
All right, so you're saying that we should actually now prepare ourselves for a price rise as well. Probably not 2022, you might start seeing hardening of real estate, residential prices even earlier than that. Gentlemen, thank you so much for joining us and giving us clarity on what to expect on the prices. Well, on the other side of the show, useful property explainer on Conveyance Street. If you want to buy and sell real estate, this is one term which is worth understanding.